Did you know that as a young investor, the most common mistake you can make isn't investing too little, but choosing the wrong risk level for your timeline? This is exactly what I ran into when I first started using Acorns. Acorns makes investing incredibly easy, automatically rounding up your purchases or handling recurring deposits. But then you get to the core decision, choosing a portfolio risk profile. Acorns offers 5 main options: conservative, moderate, moderately aggressive, and aggressive. The young investor advantage: time. When you're young, say, in your 20s or 30s, you have an advantage that older investors don't: time. We're talking about a 20, 30, or even 40-year investment horizon. This is key because the stock market has historically shown a strong, long-term upward trend, despite numerous dips and crashes along the way. Your greatest ally is compound returns. Because you have this long-time horizon, your portfolio has plenty of time to recover from any short-term market volatility. That means you can afford to take on more risk in exchange for the potential of higher returns. My first-person take on the risk profiles. When I first started, I instinctively picked moderate. I thought, I'm new, I don't want to lose money. But I quickly realized that the moderate profile, which is roughly 60% stocks and 40% bonds, was too conservative for my age and goals. Bonds are typically safer, but they offer significantly lower returns than stocks, and my retirement is decades away. Chart increasing the best fit: aggressive. For nearly all young investors saving for a long-term goal like retirement, the aggressive Acorns portfolio is almost always the right choice. Composition: the aggressive portfolio is heavily weighted towards stocks, around 90 to 100% depending on the specific model, primarily through diverse ETFs that track large company stocks, small company stocks, and international stocks. It has very little to no bond exposure. Why it works: stocks have historically provided the best long-term growth. While the aggressive profile will see more volatility, meaning bigger drops when the market is down, it has the highest potential for growth over 3 or 4 decades. Remember, a drop when you're 25 is just a chance to buy in cheaper, not a permanent loss. Chart decreasing the profiles to avoid, for long-term goals. Conservative to moderate, these profiles, with a higher percentage of bonds, are ideal for investors who are close to retirement or have a short-term goal, like a down payment on a house in the next 3 to 5 years. They preserve capital, but the lower growth will significantly hamper your long-term returns. If your goal is decades away, stay away from these. Light bulb the exception: short-term goals. If you have money in Acorns that you'll need in the next 1 to 3 years, say, an emergency fund or a specific purchase, then you should absolutely use a conservative or moderately conservative profile for that specific portion of your savings. You can't risk a significant loss just before you need the cash. But for your main, long-term investments like an Acorns later IRA, aggressive is the default choice. Final actionable advice. My personal experience showed me that fear of volatility is the biggest enemy. Once I switched my Acorns Invest and Acorns Later accounts to aggressive, I stopped checking the daily balance and focused only on making regular, recurring deposits. The key is to set it and truly forget it. Don't let market headlines scare you into switching to a more conservative option. That's how you lock in losses and miss out on the long-term gains. With that said, thanks for watching, and until next time.